Welcome to Insights. I'm Eric. I'd like to talk about the U.S. economy, specifically the Economic Activity Composite, or the EAC. If you want any help within understanding this box or the Trends tab of the matrix or this section, click on this link and you'll have a help video to discuss the components that we highlighted here. For now, we're going to talk about the EAC and the intermediate and long-term oscillators specifically. You can click these links and study them, or how this video will talk about the subcomponents. There's more subcomponents than these, but we're going to focus on this right now, and we don't talk about every one of them in the help video. The EAC is up. There's two positive numbers. The intermediate and long-term oscillators are both up. They're just barely up, and we're going to talk about that. It's about up for 3 months, so March marks the third month it's going to be up. It's really 2 months up. The cycle is pretty young, so it's well below zero. I think today's labor report is going to have the suggestions that the economy is going to recover and we're going to take off and go to the races here. And I think we have to challenge that idea, not because we don't have anything else better to do and that's all we do. It's just that skepticism of narratives is a good idea. Narratives are all over the headlines, and the reality is the facts they don't often meet the discussions that we have or that are presented to us. So we're going to open up the EAC tab. You can click the links inside the matrix to get charts like this. This is the EAC. This is the LTCO, or the long-term oscillator. And I've highlighted the bull phases so you can see them red here. Normally we've just come off a bear phase. So the real question is the start of the bull phase, which is just this little cross above the dotted line. Is this legitimate? Is it a breakaway situation? The EAC is only worried about economic expansion, which is above, or contraction, which is below, and this is calculated real time and updated on a monthly basis, but in many cases it's updated daily, so keep an eye on this. What you can see is we've just stuck our head above the water. In previous situations, expansions off of whether it be in 2011 or back in 2003, the economy slams through and breaks out. This is hardly a breakout. We pin ourselves to the upper bound, we quickly rush higher, we get there. Whether or not this is a slight pause before it does it again, it's difficult to say. But this is hardly a robust recovery. This is just a limping above the zero line, essentially. We can see that more clearly in terms of how weak it is when we look at the intermediate oscillator, intermediate term. This is also same before, except we include the blue line. And before the blue line smashes above, it really powers ahead during a bull phase. This one really didn't have the same amplitude, and it's already turning over. And it's turning over in the past. When it's turned over, the LTCO has been much lower. We could have a situation where it's similar to this, where it stays above the line. It's a possibility, but it is relatively weak. If I modify the data one more time and pull it down and have the computer estimate for the month of April, we can see that we're already on track to break below it, which suggests or raises the question: are we ready for additional stimulus? Can the Fed increase rates? Fed probably cannot increase rates under this type of economic expansion. It's too weak. Are we prepared to give out more stimulus? We're struggling for round 2 and 3. These are questions that you have to ask yourself. If they can't be done, the economy is too weak, and it's probably not going to support itself for too long. This leaves potentially, if this continues, or if this curls over into the spring and summer, the second half of the situation where, even if there's any hint of a slowdown, a resurgence in the virus one more time, even if it's a presentation of that idea and people back off, this could be a difficult setup for the second half of the year economic-wise. Regardless of whatever the conversations for the labor report are, the EAC is telling us that this expansion is relatively weak, and we have to be careful that it doesn't hold up too well. And if you consider whatever the valuations are, and we're going to head back to the matrix here, if you consider the valuations longer term, and whether it be the dividend model or the stock models, which are still up, we're still in bull phase intermediate term wise. But if we look at the dividend yield model, and you can look at videos, the long-term reviews for dividend yield, I'm not going to go into too much detail, but we're just bouncing off the lowest reading since ever. I mean, the dividend yield model goes back into the early 1800s. And in January of 2021, we generated a low that was lower than some of the warning readings that were received before the Great Depression, before some of the great sell-offs that over hundreds of years within the stock market. So it's a real warning. If you coincide this with an economic activity or an economic backdrop that's it's considered to be positive, but it's relatively weak, almost neutral to at best. That's it's a problem, and this will all have to be recalculated again. And you can see within it, confidence is still in a bear phase, and it's not getting any better as of yet. If confidence drives this all, if we head into the summer and into the second half and confidence is really not picking up, and it doesn't have to be related to the virus, it doesn't have to be related to stimulus, it can be confidence driven on all aspects. If we don't return back to our normal behaviors, the economy is not going to restore itself within a traditional trajectory, no matter what they prod it with and how much stimulus they give out. So these are all discussions that we should keep in mind as you watch the labor report and read the headlines. I will include this as the economic review for an open discussion separately, but I'm going to include this inside the matrix. If you have any other questions about what's going on in the matrix today, let me know. I would come back and look at the energy builds this afternoon or towards the close of the New York session. I think they're going to be quite important. So thanks for watching the video and have yourself a good trading day.